Gold prices continue to hold near the top of the range. Recall, back at the beginning of the year, we got trading around 1280, we got up to 1300, and now we're somewhere right near the midpoint at 1290, but we are leaning towards the top half of that range. Likewise, with a lot of issues going on, not only with growth issues, we've got issues with economic data and the shutdown, we've got issues possibly down the road with Brexit, we've got a lot of sort of risk coming into the play that maybe weren't there 6 months ago that are really starting to hit focus. And I think one of the reasons why gold is starting to find favor, or has found favor going back to the middle of November, is simply because there's, yields are going lower, stocks are becoming more volatile, and there just needs to be more risk-averse plays out there. And gold was relatively cheap at the time and is now taken off. And we're starting to see that as we move forward into 2019. I think this is only going to continue higher. I'm looking for 1350 in gold prior to Brexit. Brexit goes through without a hitch. That's going to probably soften things a little bit after. But I think leading up to it, the issue is here, and we're going to get a big vote tomorrow, is that the idea here is that the risk isn't going away despite a lot of the talking points we're seeing from both sides and how it's going to adversely affect growth and the economy and the global economy that is already suffering. So right now, gold prices hovering near the top half of the 2019 range, as short-lived as it is. But nonetheless, it is bullish. And if we look at the dollar is actually, took a nice dip last week, and then it rallied since late last week, and that has not adversely affected gold prices. So again, this is not a dollar trade that is pushing gold prices higher at these levels or keeping them elevated at these levels. This is more of a demand trade. So we have higher dollar, got maintaining towards higher gold prices. And then let's look at the positioning. Whoops, we can't. The CFTC division being adversely affected by the shutdown remains that the CFTC data is not getting put out. But as we recall, heading into the shutdown as of December 18th, which was the last data we collected for the positioning, we saw speculators continuing to get longer. And it looked to me like they were going to continue to push this higher. They're the reason why we saw the spike, heading into year end. They're the reason why we continue to hold near these higher levels. I think that speculators are right now looking for that big move ahead of Brexit, ahead of continued global growth issues, as we saw with Chinese trade data today. Likewise, as we're seeing with some of the bank earnings, and as we're going to see and continue to see in some of the economic data, and with the Fed that might have to slow down or even stop what it has started, in its tightening cycle. That is all going to be pro-gold, and right now gold prices are reflecting that. So I think the speculators are the ones pushing it. We won't know for sure until the government reopens, but that could be any day, hopefully sooner than later. But right now, gold prices on their way higher as we continue to see prices push towards 1,300 and soon above.